Hello traders, the title of the video is Fibonacci Trader asks a difficult question about 78.6% and 88.6% Fibonacci retracement. Alright, why trader always ask difficult question? Alright, 78% Fibonacci retracement level. That was an interesting question, alright, take it from me, it was an interesting question. The question was very simple, but if we want to answer it, we realize quickly that it's not that simple. So I believe that's why the trader did ask the question, is that we were talking about setting price target using the Fibonacci extension. So in the previous video, I was talking about if the price pulled back to 38.2% level, in theory, the target will be set at 161.8% Fibonacci extension level of the prior bullish move. Alright, on the other hand, if you pull back to the 61.8% level, some traders will set their target at 127% or 138.2% Fibonacci extension level of that prior move. If the price goes from point A to point B and pull back to 50% level, generally traders will set their target at 150% Fibonacci extension level. So the trader now is asking, where should we set a target if the price pull back to 78%, 78.6% or 88.6% Fibonacci retracement level? And as I look at that question, I say, well, why this guy is asking that question? Give me some break, please. No, I didn't say that. No. So out of that, okay, we can answer that question. All right, without too much long story. I'm putting on my chart now. Okay, the 88. I will just put 88. Or I'll put 88.6. All right. Okay, hold on, please. All right, so we can see also. So you see the line here. So I'm going to color it now into green. All right, pay attention carefully. That the green line there, that's the 78%. I'm not using 78.6 because I always use 78.0. That's there of what? The price action from here all the way to the top there. All right, from the low, all right, to the top. Then you see there was a trend first. Now we see the price pulling back, and you see it pulled back all the way to the zone of that 78.78. So 78.0 if it was 0.6. Okay, I don't want to change it. All right, so into 78.6% zone. All right, right there, somewhere in that zone. All right. Okay, now you need to understand also one thing I want to mention to traders that are following us at Dayprotraders. If you check advanced trading, I just say to traders, a normal price move, that's the line here, that's a normal price move, followed by a vertical price move. There is a high chance that if the retracement starts, you will go to the opposite diagonal. The opposite diagonal, this section here. Diagonal move, vertical move, retracement all the way to the opposite diagonal. See how many times it touches that opposite diagonal? The main diagonal is this one here. You see, I'm talking about this kind of rectangle or parallelepiped. Right, one here. All right, that's the diagonal, and the opposite to that diagonal is this section here. But now the question the trader is asking, if the price pull back all the way to 78.6%, or you see here, it almost come to the 88.6. This is the 88.6 here. So it almost come near it here. If we see those deep retracement, all right, it's deep retracement, where is the target? Very interesting question. What you need to do, all right, what you need to do, the first thing that you must place on your chart is to apply Fibonacci retracement, all right, to this prior bullish move, so like we did now, okay? And you want to highlight for that the 50% and the 61.8%. You see, those are two pink lines are highlighting, okay, the 50% and the 61.8% of this move. That's the first thing you need to place on your chart. when the price go deep ladder to either 78% or 88.6% level, you must highlight that zone. Good. The next thing that you must do is to apply Fibonacci retracement to the move down. You see, you went down from here all the way here. And you will also highlight again the 50% and the 61.8% Fibonacci retracement of that move down. Okay, so first time you apply it to this one, highlight the 50 and the 61.8%, which is the sweet spot Fibonacci trading zone, and then you apply it to the move that brought the price all the way to 78 or 88.6% level, and then you highlight the 50% level. Those are the ultimate target that the price will try to hit. Whether this one is below this one or this one is above that one. All right, doesn't matter which order. So those are the, if the red one was below, the first sweet spot zone, that's the target where the price will hit. That's the correct answer. All right, but we can say more to that, because you can see here as he came down all this time, you see that pink line, that's where he went to. It does not mean that the price will always go into that zone straight away. It doesn't mean that. Sometimes it will do, but you want to mark it down. If you get into there, you may find a resistance. Why? Because bearish traders were selling first. If he was in a downtrend, so there was a downtrend, suppose that there was a downtrend, and then you have a rally to 78.6% level. So you highlight your sweet spot zone. If the price pull back to that zone, there will be what? All right, of this one, I'm talking about this one. All right, buyers there in relation to this move down, 50% people try to buy them. All right, so here in relation to this move down, you rally up to this one of those two sweet spot zones, people try to sell it down. You see here. And again, you see, he went inside, he came out, he retested on the edge, he came down, he tried to retest this edge of that zone, he came down, or he pushed it almost to the 88.6% level, he stand up again, so to speak, all right? He redressed himself, and then again into that zone again, he pulled back again, and he went inside again, and they are challenging it each time he's trying to go across that zone, because that zone is a psychological barrier. So those are the things. And also when you are trading it, as you can see, you can look for trading opportunity above or in that zone. Look for chart pattern around that those zone or inside the zone. Here we have, you see, between the two peak line, we have a very tiny inverted head and shoulder chart pattern. Right? Sometimes they may say, oh, it's a cup and handle. So they may say this is the cup and this is the handle here. So those traders will be entering the trade after the handle is broken. So traders that are wondering what is a cup and handle, it's nothing to do with coffee or tea. You go to www.stochastic-market.com, click on cup and handle, okay, web page, so you can read about it if you are a new trader. So look for chart pattern in the zone, or breakable, retest and around, or a higher low above it, or a bearish chart pattern below it. Okay, and draw your trend line. So those are the target, ultimate target that the price will try to retest, but it doesn't mean that definitely it will reach that level. So you see now, okay, so after it crosses the pink one, the first one here, you see, it went into, all right, you see people were selling, see how they were challenging the price as soon as it reached that zone. They were ordered here to sell the way, you see, with all this tail. They were challenging the price. They don't want it to cross it. Now this one got, you see, it went above it a bit, so they sold it down. This is what we call a bearish engulfment. All right, so they are pushing it back. The bearish traders are challenging the price, which is corresponding also to this media line here. So those are the things that you just need to do if the price goes down so fast. All right, so the first target is this one. Another thing that you must understand is because of the Fibonacci traders. We see, so price goes up first, and then it pull back to all the way to 78.6% or 88.6% level. All right, the first move from one of those two key levels, either 88.6 or 88.6 or 78.6% level, the first thing that is coming to the mind of traders is that they are thinking of Fibonacci pattern. All right. So apart from those two zones that you must watch, highlight also the 61.8% Fibonacci extension. In fact, you have done it already, because if you have done those zones, where is the 61.8%? This one. You see, this is the 61.8% level. You see, it went above it. Now it found a resistance there. So apart from those zones, remember that if you start going up from any of those key levels, 78 or 88.6% level, Fibonacci trader, the key Fibonacci level that they are watching is 61.8%. All right. Fibonacci, okay, 61.8% Fibonacci retracement of this move down. So it's not this line here. You see the move down here. This move down, you must highlight the 61.8% level of that move down. Okay, hold up. Let me see where I am, because I don't want to make a mistake. All right. So you apply Fibonacci retracement to the move down from the top to the low carefully, exactly, and then you highlight 50%. This is it. So this line here, this is the one I'm talking about. 60. Am I correct? That this one. I'll change the color to for a minute, then I will change it back to red again. That it's not very clear. Okay. Which color should I use there, because you can see clearly on your chart? Can you see? The 61.8%, you see that line? You must also pay attention to it. But which means when you are drawing you are drawing that sweet spot zone of the move from here to here. Just remember, apart from the zone itself, the top of the zone, which is corresponding to 61.8% level, you must watch it carefully. See here, you see the green line. That's why there will be people trying to challenge the price there, trying to sell. If there was an uptrend before, they would try to buy. If there was a downtrend before, talking about the trend here. All right. So draw those two zones, and then remember also the 61.8% Fibonacci retracement level or this model. Apart from that level, also you must highlight also the 78% Fibonacci retracement level. So price here is trying after going above the 61.8% level, which I already mentioned to you, or the move from here down to here. You must also place on your chart the 78.6% Fibonacci retracement level of the move from here to here. That is okay, the line here that I'm going to color now in red. So what is happening? So to break it down to you, what you are looking for is that where so price goes down, is going to go out. Where are the resistance ahead? That's all. So if you forget everything else that I said so far, or it doesn't make sense to you, just highlight the resistance that are ahead. That's it. Usually, those resistance will not be visible. That's why we are using Fibonacci retracement zones. So the Fibonacci pattern trader will be trading after the price pull back like this. This is why we call it XA. You remember the Fibonacci pattern? So this is the X. All right. This is XA. So whenever the price goes deep like that, remember the Fibonacci patterns. And because of those Fibonacci pattern key level, the price will be breaking resistance one step at a time. So all the resistance ahead, one should pay attention to them. So one cannot say, is this level the only target? No. There are many targets, and those targets are the resistance ahead. So the correct answer, or the general answer to your question, is that what is the target for the price when it retraces to the 88.6% or 78.6%? The target is the first and nearest resistance level, or the resistance ahead. That's it. But in practical Fibonacci trading, you draw the sweet spot Fibonacci trading zone of the prior trend and also the sweet spot Fibonacci trading zone of the pullback. Remember also to draw the 78.6% Fibonacci retracement level of that pullback. But the most important thing is just remember the key level. I hope I have managed to answer your question. If not, let me know in the comment section, and in due course, I will be back again recording another video to clarify my answers. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. Alright? If you think this is an essential tutorial that can help other traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. Alright? If you are watching this on Facebook, our channel for Fibonacci trading is Dayprotraders YouTube channel. If you are watching this on YouTube, you want to know our Facebook page is Stochastic-MACD. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Fibonacci trader asked a difficult question about 78.6 and 88.6% Fibonacci retracement. Before you run away, if you are interested in high probability trading setup, check the link in the description section. We are recommending for traders to check out the link about a trade idea, a software, the trading software that allows traders to find high probability trading setup. Without a high probability trading setup, there is no winning trade. Thank you for watching, and we will speak to you soon. The financial instrument that we were analyzing today is Intel Incorporated Epic INTC, India November Tango Charlie, belonging to the Dow 30, an American stock.